On March 23rd, the world was holding its breath. We were 25 days into a tense military standoff between the United States and Iran, and global markets were in a state of panic over a specific threat: a direct military strike on Middle Eastern energy infrastructure. In the middle of this chaos, an unknown entity pulled off a staggering financial feat. In a window of exactly 20 minutes, they extracted over $100 million, roughly 840 crore rupees, in pure profit from the global markets. During wartime, market volatility is usually unpredictable. Generating $100 million instantly is rarely luck. It requires a level of certainty about the future that most investors simply don't have. To understand how this happened, we have to look at the exact timeline of the trade, tracking the movements of the money and the news minute by minute. If a single entity can predict global war shifts with this level of accuracy, it suggests that major market moves are being manufactured before the public ever sees the headlines. The sequence begins at 6:50 a.m. in New York. Historically, this is one of the quietest hours for the market. The opening bell is still 2 hours away, and trading volume is usually at a standstill. This chart shows the sudden break in that silence. An anonymous player placed a $1.5 billion bet, about 12,600 crore rupees, buying S&P 500 futures. In this context, they were betting enormous sums that the entire US stock market was about to move upward. At the same moment, a second bet appeared, $192 million, over 1,600 crore rupees, wagering specifically that global oil prices were on the verge of a crash. The scale was massive. The amount of crude oil contracts changing hands was 4 to 6 times higher than the normal daily average for this hour. With billions of dollars committed, the profit now depended entirely on a specific, immediate geopolitical event that would drive the stock market up and oil prices down. Taking a massive position that oil will crash during an escalating war suggests the buyer believed a ceasefire was imminent. Exactly 15 minutes after those bets were placed, at 7:05 a.m., the trigger arrived. Donald Trump published a post on social media. He announced that the US and Iran had been in talks for 2 days and that he had ordered the military to pause all attacks on Iranian power plants and energy infrastructure for the next 5 days. There were no press briefings or official diplomatic statements released alongside the post. The announcement moved directly from the president's social media account to the public. The market reaction was violent. As soon as the threat to oil infrastructure was removed, Brent crude crashed from $109 to $92. Simultaneously, the S&P 500 jumped 2.5%. The bets placed just 15 minutes earlier hit their targets perfectly. The unknown entity cashed out, securing over $100 million, the 840 crore rupee profit, in less time than it takes to get through a morning commute. These trades were executed in the narrow window before the president's post, suggesting that the information was in the hands of certain traders before it reached the press. But the situation grew more complicated when the Iranian parliament speaker, Mohammad Bagher Ghalibaf, issued a denial. He claimed that no negotiations with the United States had ever taken place. Iran accused the US administration of fabricating the news specifically to influence global oil prices, using the threat of war to move the market. The Iranian claims point to a broader concern about the integrity of official data, a theme that reappeared during the US intervention in Venezuela. On the betting platform Polymarket, an anonymous user placed a $34,000 bet predicting the exact timing of the US action against Nicolas Maduro, winning the payout just before the military strike in January. Several hedge funds have noted a pattern where massive market shifts occurred just before official government announcements, leading to suspicions of high-level information leaks. When a single social media post can generate 840 crore rupees in minutes, it suggests the market is less of a level playing field and more of a game won in the few minutes before the public is allowed to know the truth. Does this look like a series of lucky guesses or a coordinated use of insider information? Tell us what you think in the comments.